Good evening, Vishwas. Good evening, everyone. Just give me a second. I have to check whether I have put my pen. Okay. Good evening. Good evening. Dhanmay, Raju, Siddharth. Good evening. Good evening, everyone. Good evening, Prachi. Okay. So let's start right now. In the last class, we have went for extensive discussion about nominal GDP, real GDP, also known as GDP at constant price, whereas it is known as GDP at. Good evening, Chetan, Deepthi, Siddharth, everyone. Good evening. GDP at current price. GDP at current price. So, for example, if we are calculating the GDP for financial year 2021 to 2022, 2021-22 financial year, right? So, for that, what we have to do? Total production multiplied by price, right? Multiplied by price. So if it is a GDP, if it is a GDP which is a nominal GDP, so for nominal GDP, what we will do, we will take the price of financial year 2021-22. We are going to take the price. If we are calculating real GDP, then we will take the price of financial year 2011-12, because right now we are taking it as a base year. And in the last class, I have went for the extensive discussion ki why base year is required. Number one, why base year should be changed after a certain point of time, right? And why some countries who want to show uh, they are poor, so that they can get more and more financial assistance from various world organization. So sometimes deliberately they show the low data. This practice is basically used in African countries, right? Whereas sometimes some countries, they exaggerate themselves कि they are earning a handsome amount of income. I'll tell you the classic example of European country, that is Greece, right? So Greece went to the financial crisis. Greece went to the financial crisis, and that financial crisis started because, means, various things happened, and now Greek economy is in the crisis. Greek economy in the crisis, but actually Greece has uh, organized Athens Olympic. Athens Olympic 2004, right? So actually, when they was supposed to conduct this Olympics, right? To conduct a Olympic need lot of resources, lot of money is required to spend for the organization of an Olympic Games, right? Lot of infrastructure, good infrastructure facilities have to be created in order to uh, conduct this biggest game, right? So that is also kind of the status symbol, right? So they won 8 years back they are going to conduct this Olympic in 2004. So conduct the Olympic, already they have good facilities, but to ramp up their facilities, they need loan and grants, right? So in order to fetch more grants and loan, so if, for example, if I or you will go to the bank and you will ask the loan, so bank will first check your credit history, and you are claiming ki I need a loan of 1 crore, but bank is going to give you the loan by looking at your credit history plus your paying capacity. Means whatever is your current income, on the basis of that, bank is going to decide what amount of loan is going to be given. So Greece know that ki they are not going to get too much loan from the banks and all. So what Greek government did through their ministry, which is responsible for the calculations of GDP, they started manipulating data. They started manipulating the data, they started exaggerating the data, right? They started exaggerating the data, and by exaggerating the data, they have shown more income. Means they have taken close base year with respect to the current year. For example, current year is 2021 and base year is 2011-12. So deliberately they have taken the current year near to the they have taken the base year near to the current year. So their real GDP was exaggerated in the account books, and on the basis of that, they have went for the loan. What was in their mind? They know that ki Olympic is the biggest sporting event on the Mother Earth, right? So lot of people will come to the Greece, and they, because Greece is having a scenic natural beauty, so the tourism industry is going to boom after this Olympic, and whatever the extra amount we are going to borrow for organizing this Olympic, we can return it easily. So with this intention, they deliberately have shown the high income in comparison to the real income. So they got the loan from the European banks and other funding organization. They got the loans, and they successfully conducted the Athens Olympic. And in next 3 years, means from 2004 to 2007, the tourism industry means it started blowing, and a lot of tourists started coming to the Greece, and their tourism industry has started registering huge growth. But in 2007-8, the financial crisis hit very hard Europe and America, right? So from there is a hard hit of the recession in the European and American economy, and because of this hard hit due to financial crisis in American and European market, the tourism industry was the worst hit by this recession. And the Greek income through tourism industry, because tourism industry is one of the biggest industry for them, so their income was started getting low and low and low and low, and Greece was about to default. And in 2011-12, Greek had started defaulting their loans. So investigation was happened, and after investigation, it was found that there was a manipulation in the data, and the person who was responsible for this all these calculations, he got jailed, right? So this is why this calculations are not always very correct. There are a lot of flaws and issues, but sometimes people deliberately ignore those things. Banks know that ki Greece is manipulating the data. When Greece government has asked for the loan from the European Central Bank and other banks, they know that ki Greece is exaggerating their income. But they also know that ki yes, in the coming years, the income in the Greece is going to be increased in the extensive manner because of the rise of the tourism industry. They do not anticipate it about the financial crisis, right? Ki the financial crisis will come in the future. So on these all these calculations, they took the risk. They took the risk, and risk taken in such a manner, it backfired, and finally Greece was on default, and lot of things Greece have to do to come out of that financial crisis, right? Still Greece is not recovered from that financial crisis, and still they are repaying the loans. So this is why the data calculations is very important, and this is why what government of India is showing their data, what other organizations like IMF, OECD, Asian Development Bank. Lot of organizations do their data calculations ki what will be the expected GDP of a country. Right. So from this point of view, it's very important to know this factor. Right. One more thing I want to add here. There is a concept known as GDP deflator. GDP deflator. What is GDP deflator? I told you there is nominal GDP and there is a real GDP. Right. It is based on current price and it is based on constant price. Current price and constant price. So through GDP deflator, we can know the rate of inflation. Through the GDP deflator, we can calculate how much inflation is rising in the country. On an average, what is the rate of inflation in this country? So that is why we do use the GDP deflator formula. Sometimes they directly ask this formula in the exam. What is GDP deflator? And it can be calculated through nominal GDP upon real GDP multiplied by 100. So by this you can find the GDP deflator, which is indication of rate of inflation in your country. So to what means how the inflation is moving in your country in general. So you can calculate the inflationary rate, or in other words, it is also known as GDP deflator. How it is deflating from the real to nominal, from nominal to real. What is the deflation? Deflation means what is the means change. So this is why it is known as inflation. Why? Because it is based on current and constant price deflation. Why it is known as a deflator? Because it is a deflation from constant price to current price. That is why it is known as GDP deflator. I hope you are getting this thing. Why it is called a GDP deflator? Because it's a deflation from the constant price to current price. And there is a possibility they can ask to calculate. This is one of the calculation generally they do ask sometimes in the exam. Calculate the GDP deflation, GDP deflator. Right? They will give you the data of nominal GDP and they will give you the data of real GDP, and they'll ask you to tell the what is the amount of GDP deflator. There is very less possibility to ask any numerical question in the GA part, but if in any case any question will come, that will come in generally from this equation. What is GDP deflator? Right? Is it clear? So current price to constant price, constant price to constant price to current price. Constant price is always going to be low, right? Constant price is always going to be low with respect to the current price because inflationary rate are always going to increase. So it is the deflation from what? It is the deflation from the constant price to current price. If you got this point, one more point is per capita income. Per capita income of a country. Per capita income of a country. So, okay, everyone. Ayusha, good evening. Vishwas, current price. Okay. Okay, fine. Sir, if constant price is low, then we are moving to the higher side. It will means inflation. It will mean inflation. See how you calculate the inflation, right? How you calculate the inflation? We calculate the inflation. What is the rise in the price? So suppose that price was 40 rupees. Now it moves to 50 rupees. So you are moving from lower to higher price. So you can find it if the price earlier it was 40, now it is 50. So how much price is increased? Price is increased by 25%, right? So from lower to higher, we will get the how much inflation is increased, right? If suppose that price was earlier price was 80, now it is 40. Price earlier it was 80, the base year price was 80, but the current price is 40. In that case there will be the case of deflation. Why there will be the case of deflation if you are moving from base year price to the current price? From base year prices, generally it is going to be what? Generally it is going to be the low price. And in case suppose that base year is not, they choose the base year with this thing in their mind. For example for example, I'm just giving you the example of country A. So country A is about to decide their base year. Okay, country A is about to decide base year, and they want to go for the calculation of financial year 2022, and they have to take the base year. So they are choosing the base year 2012 to 2030. But in this year, there was a drought in the country, and country went for a war. So that is why in this year, the price was exceptionally high. The price was exceptionally high in this year. So they are not going to take this base year. They will not take this as a base year. While taking the base year, it is always being considered that the base year should be in a normal year, not should not be abnormal year where is a huge fluctuation in the prices. Right, that is not going to be considered as a base year. So the year of war or year of drought or flood or any natural calamity which triggered the extreme rise in the prices in that year, that is not going to take the base year, because it is going to completely destruct the entire calculation part, because that was an extreme fluctuation. Okay, so they take this thing in the proper manner. Okay, yes, I wrote deflator. It is not deflation. It is deflator. Okay, fine. So let's move towards what is the per capita income. So total GDP upon population. So whatever is your GDP divided by the population, you will find the per capita income, right? So the per capita income can be achieved, means can be calculated. GDP upon means upon total population of your country, we will got the per capita income. Sometimes students get confused with per capita income and personal income. Per capita income and personal income, there is a confusion among the students when they read these two things: per capita income and the personal income. Right, I told you how to come at per capita income. To come at the per capita income, what we have to do: GDP upon population. GDP upon the population, you will get the per capita income, right? Can we determine the inflation percentage with the GDP deflator? Yes, for that purpose it is being used to determine the percentage of the inflation. So to get the per capita income, what we have to do, we have to GDP upon the population, and we will get the per capita income. But how we can get this concept of the personal income? You have to pay attention here. Very means you have to pay attention. Initially, I have calculated GDP at market price. Right? I have calculated the GDP at market price. Then what I did, I added indirect taxes, right? I added, sorry, indirect taxes subtracted and subsidy added. We got the GDP at factor cost. And if we will reduce what? Depreciation from here, we will get the NDP at market price. And here, from here, we will get depreciation subtracted NDP at factor cost, because market price is equal to factor cost plus indirect taxes minus subsidies, right? Whereas another formula we have did, that is GNP, and GNP is equal to GDP plus net factor income from abroad, right? GNP is net factor income from abroad plus GDP. Sir, can we determine the percentage of GDP deflator? If yes, why CPI and WPI is used instead of the GDP deflator? As GDP deflator considered as the entire economy and not just the certain items. Yes, GDP deflator is going to show the overall inflation, but just calculating the overall inflation is not sufficient, right? Just calculating, just having the idea of, see, I am telling you again and again, these data are not final. There are some discrepancies in that data, and when you have a discrepancies in your data, single source of data or single way of calculating the data maybe go for wrong way of the calculations, right? So this is why it is very important to collect the data from the various methods and various sources, and then we will take the mean. Then we will take the mean of all these data, and then we will go for the policy making purpose. For example, when we will go for CPI and WPI, wholesale price index. In the wholesale market, what onion or potato you are purchasing right now. For example, if potato is 40 rupees per kg, if you will ask a farmer at what price he is selling, maybe he is selling at the price of 2 rupees or maximum 4 rupees or maximum 5 rupees per kg. The same thing you are getting at the price of what? 40 rupees per kg. So if there is a change in the price from 2 rupees to 2 rupees 25 paisa, in the consumer market there will be the huge change, right? So this is why sometimes what happens, sometimes the data is not accurate. So in order to avoid these discrepancies, we have to calculate data at different level by using different methodology, so that finally you will get some mean data, and that mean data can be used for the policy making purpose, right? Again, one more example. India have a huge informal sector where the payments, production, each and everything is not being calculated. Why? Because they are not proper registered transaction. When you are going to purchase a tea from the tea stall, right? Is he's going to give you the tax invoice? No. When you will purchase that tea from the McDonald's, or you are going to purchase that tea from the any Indian restaurant chain, they will give you the tax invoice. But the street vendor, he is not going to provide any tax invoice. You are making all the payments in form of the cash. So from the raw material to the tea stall, he's purchasing the raw material by paying the cash. So he is a completely part of the informal economy. The transaction at any point is not recorded. Any point it is not recorded from the beginning to end. It is not recorded anywhere. So that is a huge data, right? And India's economy, around 20 to 25% of the total volume of Indian economy is in the form of informal sector. So India's data of GDP data or India's each and everything data is highly inaccurate. Highly inaccurate. This is why you can see when Indian government is saying that 9%, IMF is saying that 7%. Right. So government of India is with optimism. Why? They feel that ki, okay, 100 rupees is coming from the formal sector, and as we do have the 20% in the informal sector, so our income is going to be the 120. IMF is not going to consider the informal sector is giving you the 20% income. So that's why IMF is little bit more conservative while calculating the data. Right. So these are the reasons we have to go for other way of calculations also rather than just even I say GDP. Right. I say GDP, you are going to calculate GDP at market price. You are going to calculate the GDP at factor cost. But you are also going to calculate NDP at market price. Again, you are going to calculate what? NDP at factor cost. All these calculations are going to be done by the statistical department. MOSPI is going to calculate all this data. When you will say the GNP, so again the GNP is going to be what? GNP at market price, GNP at factor cost. Then again what you have to do minus depreciation. That is going to be what? That is going to be NNP at market price, and it is going to be NNP at factor cost. So what do you think? Is government is going to calculate only GDP? No, they are going to calculate all these data. They are going to calculate all this data. Every data is going to be calculated. And you know, out of all this data, this is known as national income. It is NNP at factor cost which is known as a national income. Right? We called it as a national income, but entire calculation is based on what? Entire calculation and focus is on GDP. Have you ever heard this NNP at factor cost? In common policy making or even daily newspaper, everyone from IMF, Indian government, RBI, every organization is saying GDP, 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 and GDP. Right. But when we talk about the national income, we calculate the national income in terms of net national product at factor cost, NNP at factor cost. It is defined as national income because it is going to reflect what NNP at factor cost it is going to reflect. It is going to reflect the income of, tell me, resident or citizen. NNP at factor cost will reflect the income of whom? Resident or citizen? Tell me. If I'll say citizen, very good, citizen, because it's a national product, and national product is about the citizens, whereas residents income are going to be calculated in terms of what? Residents income are going to be calculated in terms of GDP or NDP, whereas citizens income is going to be calculated in the form of GNP and NNP. Now question arises here. Question arises here, why NNP at factor cost is defined as national income. Why? Why we called it as a national income? And another question, if we are calling it as a national income, why we are not focusing on this and why we are focusing on this? Two questions. First question is why. I'm going to answer. I'm going to answer. You need not to answer. I'm going to answer, but in the form of question. Why we will call it as a national income, right? And why, if we are calling it as a national income, then why we focus more on GDP rather than net national product at factor cost? So the thing is, I will answer the second question first. Why we focus on the GDP? GDP actually shows us what amount of production we are going to do in our territory, right? GDP basically shows what amount of production activity is happening in your country, right? So the logic is, if the production activity is going to increase in our country, right, then definitely those who are citizen of India in India, those who are citizens of India and they are in India, their income is also going to increase. I told you, when we calculate the income of whom? When we calculate the income of citizens. When we calculate the income of citizens, then it is comprised of Indians in India and Indians outside the India. Right? Citizens means what? He should be the Indian whether he is in India or he is outside the India. Right? So first we will see how our GDP is rising. That means how the production in our country is rising. So if production in our country is rising, definitely it will help Indians in India to increase their income. Income of Indians in India, it is going to help. So this is why we focus more on GDP, right? And in order how much income is increased of our citizens, we will finally go for national income in terms of net national product at factor cost, right? How? Now the first part I am going to explain why NNP at factor cost is defined as national income. All of you know that when we say GNP, GNP means production income through production by Indians. When we say GNP, income through production by Indians, whereas GDP say that ki income through production in India, right? So GNP is telling us income through production by Indians, right? But this income through production, when we say production, it is generally considered as gross production. And I told you gross is inclusive of what? Net plus depreciation. So when we calculate the GNP, it also includes the income generated through depreciation. Depreciation is a wear and tear we do spend for the maintaining of the production rather than increasing of the production. Now what we want to know, again I'm repeating, when we say gross, it is inclusive of net plus depreciation. So students sometimes ask you, sir, what is the need to remove the depreciation? Income is generating, na, even through the depreciation, but income is generating. I said yes, income is generating, even through the depreciation, income is generating, because for the maintenance purpose, we do make the payment. If I am running a production unit, and in that production unit some wear and tear is there, some machine is not working, I will hire a company, agency, or worker who is going to rectify that problem, and I am going to make a payment to him. So he is going to get the income. I said yes, he is going to. So sir, GDP is being contributed or not? I said yes, contributed, but that contribution is for maintaining the production, not for the purpose of increasing the production. So when we have to focus the amount of GDP which is dedicated for production only, then we must have to subtract the depreciation part. So we have depreciated, means depreciation we have removed, and what we got? We got it NNP. Shubham is asking, higher GDP is good or bad? I will come to this question. I will come to this question. First, understand this thing. This is very important. So, please understand this thing. I will come to your question. So, that's why we subtract this depreciation from here, and we will got the NNP. Right now, we know that ki NNP can be on market price and NNP can be on factor cost. Right. So when we say market price, it is already comprised of factor cost plus indirect taxes minus subsidies. So uh, remove, if we are going to remove this indirect taxes and subsidies, that means whatever the amount we are going to get, it is going to reflect the pure income generated through various efforts, right? Various efforts for the production only, whereas indirect taxes and subsidies are being sponsored by the government can change it, right? Indirect taxes can be manipulated, or manipulated in the sense can be changed, right? Similarly, subsidies can also be changed, and it is not going to give the proper data. So this is why when we go for the factor cost, it is showing the effort made by the Indians to produce and to increase the production. This factor cost is showing how much efforts we are making for income generation, right? So the effort we are making for the income generation, this is going to be reflected through factor cost only, and obviously NNP, because we have to remove the depreciation part. So this is the reason why we defined NNP at factor cost as a national income. I hope this is clear right now. In simple words, the real production reflects the national income. Yes. So all of you who are watching this lecture, are you able to get this concept? Please comment here so that I can move forward. I'll wait for your comment. If you have any doubt, please ask me. Only then I will move forward, and then I'll also come to the Shubham's question. Higher GDP is good or bad? Ayusha is saying that clear. Okay. Okay. Prachi, Shubham. Okay, good. So if it is clear, now I'm coming back to this point, that is per capita income. I will come back to this point, per capita income. And I told you that per capita income means GDP upon population, right? So from here I will answer Shubham's question: is higher GDP good or bad? Actually, Shubham have to answer, or all of you have to answer: is GDP good or bad? Right? Example is, suppose that GDP of a country is 100, right? GDP of a country is 100 and population is 10, right? Population is 10 and GDP is 100. Then PCI, per capita income, is going to be what? Per capita income is going to be 10. Just for example, $10, right? Per capita income is $10. This is what is reflecting, right? This is what is reflected. So this is, suppose that that is the data of year 2000, say 2017. Okay, so in 2017 the GDP of this country was 100 and population was 10, right? Now in this country, the population and GDP data, suppose that GDP in 2022, GDP is 800. In 2022 GDP is 800 and population is also 200, right? Population is, sorry, 20. So population is doubled, GDP is also increased, population is also doubled. So their income is right now how much? $40 per person. Okay, so you can see that in 5 years, income is increased by 400%, right? Income in this country, the per capita income in this country is increased by 4%, sorry, 400%. So the remarkable journey is being done by this country on paper. But now we are going to closely analyze this population, right? The 10 people and the 20 people. Out of this 10 people, Adani, Ambani, Tata, Birla means out of 10, the 4 are big businessmen and rest of the 6 people, common people. Rest of the 6 people, they are common people like you and me, right? And rest of the 4 are big business houses. So 10 people are generating 100 rupees. But when you checked how much contribution made by these 4 people and how much contribution made by 6 people, so you found that these 4 people are contributing 90 rupees and these 6 people are contributing 10 rupees. So combined income went to 100 and per capita income came to $10 per person. When we have calculated 800 rupees income here, we found that 8 businessmen of this country, they are contributing somewhere around 720, whereas rest of the 12 people, they are contributing only 80. So that is why the complete income is 800 and per capita income is showing 40. But actually these 12 people are contributing how much? These 12 people are contributing only 80. Only 80. So per capita income is showing here how much? $40. per capita income is showing here $40, but actually these 12 people are getting somewhere around $7.5. But per capita income figures are showing that how much? Per capita income figures are showing that $40. So country is increasing the income. Country is increasing the income, GDP is increasing, per capita income is increasing. So income is increasing, but the flow of that income is not even. So GDP tell us our income is increasing or decreasing. Our overall income is increasing or decreasing. Our average income is increasing or decreasing. But GDP failed to tell us the distribution of the income. Is the distribution is also going to be in the proper manner or not? Right? So GDP failed to answer this question. So we have seen that GDP is increasing, for example, in the case of India, since last 30 years, India's GDP on an average is increasing with a 6% rate. 6% rate. But if we will compare the poverty, the rate of poverty or the people under the poverty, if we will go back 30 years back, we will find that around 30%, 34% or even 35% population was below poverty. Right now, it is somewhere around 18 to 20% population below poverty line. But if our GDP is increasing with the 6% rate, it should be only 7 to 8% people under the poverty line. So what is happening? Our GDP growth rate is accelerating, right? Our GDP growth rate accelerating, but GDP growth rate is not able to tell us how income should be distributed in the better manner, right? So this is why GDP is not being considered as a factor of what. There's a two term. One is economic growth and another is development. So growth must lead to development. So GDP is showing our growth, but this growth is not properly or evenly reflected in terms of development, right? So this is why GDP should not be considered as a end factor, right? We should not be very happy and satisfied our GDP is increasing, so automatically economic development is happening. After calculating the GDP, we also have to pay attention for inclusive growth so that development should reach to every person, right? As their income is rising, their contribution in the tax and economy is also rising. Yes, so don't underestimate the power of a common man. They will also invest in the infrastructure to create a new jobs. As they are earning more, their employees will also earn higher salary and the business is growing. And that is why India is the sixth largest GDP and GHI is 100 and is 131. Yes, Chetan, I agree with you, and I am not against Adani, Ambani, and whosoever is generating the huge income. Even what income I was generating in 2012 when I started 11, 12, when I started giving the tuitions, and what income I am generating and I am contributing, I'm also have increased my income, right? So it's not a point. The point is government is able to transform, is government is able to transform. So it is not an issue of whosoever is generating the income, it is the responsibility of the government. And anyone if have a delusion, right? If anyone have a delusion of this thing, ki if the industrialists are going to increase their income, poverty and unemployment is going to decrease. I will request them read the book written by Thomas Piketty. Right? Thomas Piketty's book. I'll show you on the screen also. Just give me a second. Okay, that is not possible. But anyone anyone who have this delusion कि capitalists are rising, so country is also going to grow, especially poverty and unemployment is going to decrease because there is a rise in the capital formation in the country. So you should read the book written by Thomas Piketty, and the book name is Capital. Highly recommended book for those people who have some basic idea of economics and they love reading books, good books. They must go for this book, right? And another book, maybe I'll have that book here right now. Okay. This is one book. This is one book written by Jean Dez, right? Written by Jean Dez. In this book, you will find that the sense and the solidarity, the Jholawala economics for India. He shown the real picture, ki how the income is being generated, to what level the huge income is generated in India, but it is not being people who are in need, right? So poor economics, yes, poor economics, but poor economics is not hitting very hard to the central issue. Poor economics of Abhijit Banerjee means it's a good book, but it is not hitting very hard to the core issue, right? But these people like Jean Ders and Thomas Piketty, they actually is, मतलब हिंदी में कई बार बोलते हैं ना कि ऐसी जगह पे मारेंगे जहां पे पहले से ही तुम्हें पेन हो रहा था, ठीक है, जले पे नमक छिड़कने वाला काम, राइट? सो यू आर ऑलरेडी ब्लीडिंग एंड आई एम गोइंग टू हिट यू देयर ओनली, right? So these books like Jholawala economics or Thomas Piketty's book, they pinpointed the real issue in the economy, right? These people who are generating huge amount of income, they create, everybody is following what Elon Musk is saying, right? Elon Musk quote, Ratan Tata quote. A lot of time you can see in the social media quote given by the Ratan Tata, quote given by the Elon Musk, blah 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 and blah blah blah, right? Actually, it is a poor man who is hungry, right? Who is hungry and he is not getting the food. He will tell you the value of the food. He will tell you the real lesson of the life, right? So sometimes what? Sometimes it's hard to accept those facts. But when you will go deep inside and you will study those things, then you will find that. So that is why it is commonly known fact in India specifically. When you will read too much, you are going to be more leftist in your orientation. More leftist in orientation means what? You maybe are not going to agree with the growth led by the capitalism or the industrialist. You are not going to accept this. For example, in JNU, generally the orientation among the JNU scholars is what? They are not very convinced with what? They are not very convinced with the social means the capitalism led growth, right? So this is the point. But irony is also our finance minister is also genius scholar, right? So these things happen. We agree to disagree. We disagree to agree. So this is the way how human works. Maybe I agree with some of your point, and maybe I will disagree with your points, and we work on this thing. Trickle down economics practical concept. I will answer this question. Poor economics by Vijay Shreya Shud. By what beautifully settling book. Ultimately, a source of water, air, food, land, and the main factors. Rest is the calculations of the fascinate the mind. Yes, that is why. Then I'll come to your trickle down question. Ultimately, resource water. Even I read Karl Marx Das Kapital. I read that. Can you see this book? This book is Lord of Finance, written by Liaquat Ahmed, right? In this book, Lord of Finance, he explained in the extremely well manner, how this finance capital capitalists, they manipulate the entire government policy making, people's mind, money flow. He explained in the beautiful manner, right? So once you will read this book, you will find how the delusion is being created in your surrounding. The false perception is being created in your surrounding, and you feel happy, right? It's like a movie of Matrix. You are living a life under the computer program, right? So these are the people who have shown the real face of the society. They are the very good people. So it is always means, from my side, I always recommend you the joy of learning. The joy of learning, it's the biggest means the thing you make yourself happy. So I'll recommend you read good books. If anyone who is interested to read good books in a particular area, just let me know. I have a good books. I'll suggest you this book you should read. For example, if you want to read in the psychology, if you want to read in the philosophy, if you want to read in the political science, if you want to read in the economics, just let me know. I'll share the good books with you, and you will really feel happy while reading those books, especially these kind of the books. Okay, now see, come back to the point. So the question was, is GDP good or bad? GDP is like a requirement of blood sugar in our body. If there is a deficiency, there will be a problem. If you are going to unnecessarily exaggerate the GDP and GDP, again it is going to be harmful for you. If you are not focusing on the GDP, again it is going to create a problem. Because if you want to uplift the people, you want to provide the basic facility to the people like cloth, food, and shelter, plus other facilities, you need money. Government need money, and government can get the money through the taxes, direct taxes or indirect taxes. For that, capital formation, income generation is required, right? So we cannot underestimate the power of GDP, not common people. We cannot underestimate the power of GDP, but we should not worship the GDP. We should not worship the GDP, because GDP is not a thing which can show the development in your country. It only shows the growth of your country. I have a huge collection. I have almost around somewhere around more than 100 books on the various topics. I love reading books, so I have huge collection of the books. You tell me what kind of the book you want to read. I don't read fictions. I only read non-fiction books because they are means practical thing. So I read non-fiction books. So if you are enthusiast, or if you have this thing in your personality trait, you want to read a good book, let me know. I'll tell you. I'll tell you which exact book you should read. Okay, now this per capita income. So here with this discussion, we came to know that GDP and related calculations are focused for growth, not development. Right? Growth, but not development. So this what I just explained you, this was highlighted by many people in 1970s. In 1970s, many people, many economists, they have highlighted the vulnerability of GDP as a concept. Right, GDP as a concept, they highlighted the vulnerability. GDP only economic calculations, it is not going to help the overall thing, right? So this is why the debate was started. If not GDP, then what should be the basis of calculation which can show us growth as well as development, right? So Bhutan came with happiness. Bhutan came with happiness index. So Bhutan, rather than calculating the income, they do calculate the happiness. But the problem is happiness is subjective thing. Happiness is a not an objective thing. Happiness is subjective thing. So it is not possible to calculate in the proper manner for the data analysis, and how to increase it or how to decrease it further, right? There are the data means for the happiness, they use some data, right? They use some data, but these data are not very authentic, and these data are subjective. For example, if you are going to ask a person who is having a car, right, who just purchased the car, and you are going to ask him, are you happy while purchasing this car? Yes, I am happy. But once he is going to know that his cousin has purchased better car than him, then his happiness is going to decrease to some extent, right? Because he is feeling little bit jealous, right? So happiness it cannot be quantified. It is a kind of what a qualitative thing, but it cannot be quantified. It cannot be quantified in the proper manner. Yes, it is a qualitative thing. So it can be used as an another thing. Apart from GDP, it can be used. Apart from GDP, it can be used, but it cannot replace the GDP. Right? It cannot be replace the GDP because it's always there is a lot of subjectivity in the concept of happiness. Second thing, happiness cannot be quantified, right? And things which cannot be quantified, we cannot do the analysis. So this is the reason happiness index is not being widely used, right? And GDP people say that ki GDP can be quantified, but happiness cannot be quantified. So happiness index was not being opted by more countries. However, two economists, one is from India, that is Amartya Sen, and another economist from our beloved, friendly, most friendly neighbor country, Pakistan, Mehboob ul Haq. Mehboob Haq and Amar Sen, they have started study on this thing in 1980s to devise a kind of formulation so that it can be quantified in terms of growth and development, and with that they can come with human development index, HDI, right? I never knew economics and philosophy go hand in hand. If you will go deep down in any subject, you will reach to philosophy. Any subject, any subject, if you will go deep inside, you are going to connect with the philosophy, right? So it's a fact. Except some science means even physics and maths, right? Physics and maths. If you want to do the excel in that field, you have to be little bit more philosophical in your thought process. Only then you can reach to those points. Why Einstein want to meet Rabindranath Tagore? He came to India to meet Rabindranath Tagore, right? The man who has the highest IQ till then date, officially, right? So philosophy is kind of the thing. If you understand the philosophy, you understand each and everything, right? Okay, so HDI was devised by this Amartya Sen and Mehboob ul Haq, and United Nations Development Program UNDP opted HDI as an index for calculating economic growth and development in place of HDI. Right. So UNDP every year they publish the report. They do not publish the report of GDP. They publish the report of Human Development Index every year. Right. Okay. Okay. Actually, I have to stop class here today. I have some work and I cannot continue from here. Means in next class, I will explain this HDI concept and I will explain you about the poverty and how it is being calculated. Because the poverty calculation is very important from the point of view of this HDI. So I'll take forward this discussion tomorrow. Unfortunately, I have to wind up this class right now. I have some urgent work, and that's why I have to stop it here. Okay, so I'm winding up here. I'll start further discussion from HDI to poverty and related concept in the next class tomorrow. Okay, so thank you very much. Goodbye. Thank you.